Good morning, ladies and gentlemen, and welcome to the show. Today is July 30th, 2019, and we got a lot of stuff going on. First thing we want to take a look at is we want to open up the charts right here and take a look at the gold price. You see it's steadily climbing upwards this morning. It's reaching highs it hasn't seen in a while. 1428. Now, you know the breaking point is 1450. She crosses 1450. We're on a tear. Let's take a look at silver today. 1646, and it's rising too. It's up 4 cents on the day so far, and looking good, looking strong. You know, gold and silver have been doing good. Now, let's take a look at cryptocurrencies today. Cryptocurrencies is 264 billion.8. Let me just refresh the page here and see what they're doing this morning. 264.6. Yeah, they're staying in around this price. They're going sideways right now. I think they could go into the 8,000s for Bitcoin. Upper 8,000s before we get ready to turn to the upside again. I'm still predicting that, and I don't think it's going to go below $8,000 for Bitcoin because there's an awful lot of support at the $8,000 level. But it's a little bit bearish right now. It has been for the last week or two, you know, but it's not really a bear market. This is a bull market. It's a bull market that's got a little bit bearish, just a little bit, for a little while. I think it's going to come out of it and go back bullish again pretty soon. I think it's going to go back bullish at the end of this month, and that's what I've been predicting. Anyway, we'll have to wait and see. Let's take a look now at the stock market. Let me refresh the page. Down 106 points on the day. You know, this market has already priced in the rate cuts. In fact, they've priced in 3 rate cuts. That's what they've priced in. So now we're going to have to wait and see what the Fed does in all of this. But they've already priced in 3 rate cuts. I'll tell you what they haven't priced in. They have not priced in Boris Johnson, the new leader of the United Kingdom. And I'll tell you what, he's headed for there's huge problems coming up. Now, you know, Europe is going to be the center of this crisis that's coming. It's going to actually be a dollar crisis, but the United States isn't going to be the center of it, the crisis. It's going to be Europe. I'm going to talk about the dollar index in just a minute. Let's move on and let's take a look at oil prices today. What we're looking at is up 24 cents, 0.5% on the day. You can see the rise in price right here. It's starting to fall off now, but we are up a little bit on the day for sweet light crude oil. $57.11 for sweet light crude oil per barrel. That's the price right now. Let's take a look at U.S. Treasuries. Treasuries are a mixed bag today. They're not really moving that much. There's not a lot of movement. Probably the largest amount of movement is in the 30-year. We're seeing just over 1 basis point, which is really nothing much. So treasuries are kind of mixed today. Some of them are moving up, some of them are moving down, but they're not moving very much. It's not much change in the Treasury market today. But let's take a look now at the U.S. dollar. Now this is going to be a big problem, is the U.S. dollar. Coming up soon. You know, if this dollar goes too high, it'll wipe out the United States economy. I mean, you can't let this dollar index get too high. But the funny thing is the dollar index has nothing to do with the purchasing power of the dollar. Purchasing power of the dollar can actually be decreasing because all the dollar index is pegged against is a basket of other currencies. So you have the dollar, right, all by itself. And they're comparing it to a basket of other currencies. Now, the Great British Pound, the Canadian dollar, the Swiss franc, the euro. The euro makes up the biggest part of that basket. By far. By far, by far, by far. It's like 3/4 of that basket that they compare the dollar against. So any little movement in the euro affects the US dollar index drastically. Now, we've seen the dollar index climb recently, and the reason why we're seeing it climb is because the British pound is falling. And it's falling because of Boris Johnson. And so this is why we've seen this rise up from the 97s to the 98s, is that percentage of the dollar index that is the British pound. But that only makes up a small percent compared to the euro. The euro's a big one. If the euro starts to lose value, then the US dollar index will soar to the heavens. And that can really destroy trade. It can really mess up the economy big time. Is the US dollar going too high, right, on the US dollar index? But that in no way reflects upon the actual purchasing power of the dollar. The dollar can be losing purchasing power like crazy, and still the dollar index go up because of the way it's pegged, because of what it's pegged to. And it's the strongest and best looking currency in that entire index. Look at the British pound. Look at the trouble it's going through. Let's take a look at that right now. Let's go over here to deal or no deal. And this affects the euro and the pound, right? And this is very correct, this article. It says deal or no deal. Brexit's already ruined it. Basically, that's what they're saying here. The Brexit has already ruined everything. It doesn't matter now at this point. It's already done. It's finished. Deal or no deal, Brexit dooms the euro. So now, the European Union is held together with the euro. The euro is their currency, you know? And already the damage has been done to the great British economy, to Great Britain, the United Kingdom, and their economy. The damage has been done by this already. If they go ahead and go with a Brexit, a hard Brexit, no deal, a no-deal Brexit, this is where we're headed. It's looking more and more likely all the time as Boris Johnson and the European Union digs in their heels. You know, he's wanting them to make a new deal, but they're digging in their heels. As we head toward this Brexit, and every day we're getting closer to it, and I mean that is coming up fast. The 31st of October is coming up fast. Markets haven't priced any of this in yet, you know. And what about the dollar index? That's the thing that's on my mind, is the dollar index. When the euro and the British pound both start to run into these problems, and this whole crisis is going to be centered in Europe, well, you know, let's read a little bit of this. It says, deal or no deal. When it comes to Brexit, the euro is toast. Markets, however, believe the fantasy of its survival. As we approach the end of July, the euro clings to support at 111, mere pips away from a technical breakdown. That breakdown will trigger a wave of asset liquidation and another round of negative headlines emanating from troubled German banks. Really what they're talking about is not just Deutsche Bank, but more, you know. And Deutsche Bank, this problem is going to be a systemic banking problem in Europe that's going to, honest to goodness, it could be, this crisis could be unbelievable in proportions, what's coming to Europe, you know? We've already seen signs of what's to come in the resentment of the people in France. Just take a look at the resentment of the people in France. That resentment is in every country in Europe. We saw a manifestation of it that played out over the last number of months. You know, Paris was burning. Basically, Paris was burning. They've turned a blind eye to it, but they're turning a blind eye to what the people are feeling. This is all across Europe. The people are used to a good lifestyle, a luxury lifestyle, you know, Italian wine and driving their Lamborghinis off of money that they borrowed when the European Union was doing good. You know, there always comes a price in the future. If you borrow from your grandchildren, borrow from your great-great-grandchildren to live an extravagant lifestyle now, there's always a price to pay in the future, and that price is going to be very dark indeed. And this is what's coming. And it's all going to start soon. So this crisis is going to be centered in Europe. But it's going to reach its tentacles out. It's going to affect the economies of every place else. China's got huge problems too. Not just Europe, but China's got huge problems too. You know, I think the United States and the United Kingdom are going to actually come out of all this rather well in the end. But they're going to go through a period that's probably going to last a little while. I'm not exactly sure how long it's going to last, but it's going to be a rough patch. You know, when it's all over, trade deals are going to be made between Boris Johnson and Trump, you know, and things are going to brighten up. The sun's going to come back out again. But we got to go through this looming financial storm that's coming. It's going to be centered in Europe, and it's going to actually be, I can see it starting to unfold, and I think when it's all over and the dust settles, there's not going to be a euro anymore as a currency. And I mean, that's a huge statement for me to make right here. So listen, thank you guys for listening. Like and subscribe. And give me a thumbs up, and we'll see you guys later. Bye-bye, guys.